Hello, everybody. Welcome to the Wednesday live stream. So today, things are going pretty well in the crypto market. It looks like there's some things that are happening behind the scenes, and that is fantastic. So it's time for us to plan and plan ahead, and that's how people stay as winners. And to help us do that for everybody's favorite subject, crypto taxes, I brought on David Kemmerer. David, welcome back to the show for the 20th time.
Yeah, thanks. And it's good to be back. Happy to be back on Digital Asset News.
I'm sure. And everybody's happy to have you because they love to talk about taxes. Everybody loves to talk about, no one loves to talk about taxes, but they're important. And it's important that we do and set these things up right, because right now you may have received a 1099 DA form from Coinbase. And you're probably thinking to yourself, well, what the heck is that? So I brought David on to talk about what that is, what changed from last year, and how to make things super duper as simple as you possibly can. But before we get into it, just so everybody knows, this is the 1099 form, of course, is for here. But if you're looking for tax help, CoinLedger has it for everybody throughout the world. Not every single country, but quite a few. And you can take a look at their tax guides. I will link this in the description so you can definitely check it out. I've been using them for 5 years now, and I'll be using you guys again for this year. So thank you. My CPA thanks you, because she does not like to go through all these crazy trades I've done. And also, as a reminder, you can also sign up for a portfolio. Now, this isn't my portfolio per se. It's a dummy portfolio, but you can use this for free to go through the whole process of kind of seeing where your returns are, if you have any, unrealized gains, unrealized losses, and how it's going to work out for taxes themselves. And if taxes scare you like they scare me, there's also different services that CoinLedger offers that can help you get to where you want to go by following this stuff. But that's not the big story. The big story is, David, what is going on with this 1099 DA? And everybody's starting to receive this in the mail. What's happening?
Yeah, so we've definitely hit on it before, but this year is the first year that your exchanges, your centralized exchanges, are sending you, the user of the centralized exchange, a 1099 DA, which is a tax form that essentially shows how much you sold on the exchange in the previous year. And that tax form gets sent you and a copy to the IRS, identical copies. So essentially it's the IRS's mechanism to crack down and just check, okay, is David, by this social security number, reporting the income that Coinbase said he generated on the platform? And so as of last week and now through the next month, millions and millions of these 1099 DAs are being sent out. So we're just seeing a ton of questions. I thought it'd be helpful to just kind of walk through, put people's minds at ease, and talk through, what to do if you received one of these 1099 DAs.
Right. Hey, so real quick, I thought, is this the first year, or how did they find, not how they find out, I don't want to word it like that, but how did the IRS know that we did any kind of trading in crypto before this year? Did Coinbase report anything, or they didn't report anything at all?
Yeah, so they have. So 1099 DA is different than, like, in the previous years, they've used 1099 MIS, MISC. So that reports like income over $600. That's staking income, other rewards income. They have also used other 1099s. Some exchanges use 1099B in the past. Some have used another form of 1099 that reports transaction volume. But that has not been consistent over the past year. So there has been mechanisms, but this year is the first year that every US-based centralized exchange will be sending this form that actually reports every single disposal or trade of crypto. And so in the past, they have dabbled. This is the first year that literally every US crypto user, if you made a disposal, will receive one of these 1099 forms.
When you say, okay, well, great, thank you for letting me know. When you say disposal, you're talking about the trade for as it executes and you take profits or a loss. Is that disposal?
Yeah, disposal would be if you trade one crypto for another crypto. So if you trade, let's say, Ethereum into stablecoins, that's a disposal of Ethereum. Some people are like, well, I never cashed out to fiat. Doesn't matter. You did dispose of Ethereum in that trade. Other disposals could be maybe you paid for goods or services with crypto. That's a disposal of that crypto. So anytime you dispose of crypto, that is a taxable event which realizes gain or loss depending on how the crypto has fluctuated since you originally acquired it.
Okay, so how about this? Walk us through this, because like, let's say we get this form, right? Form comes in, says, this is David's form, here's the social security number. And then it'll talk about not the 10 proceeds, date acquire. For right here where it says like name of digital asset, are they going to start to just list all digital assets that you have here, and then they actually give you an amount? Or how does that part work?
Yeah, so I have this covered in, if we switch just to just brief slides.
Okay.
And I'll run through these quick, and it'll
Perfect.
answer that exact question here in the next slide. But number one, if you receive this, like, don't panic. Everyone is receiving these, and it's going to be a transitionary year where the IRS, the taxpayers, the exchanges are figuring out how to work with these new rules. There's going to be some bumps along the way, but don't panic. You're not in any sort of trouble because you received this form.
Okay.
So we talked about what it is already, so I think we can skip this. But this was your question, like, what does it report? And so on that form, it's going to report the asset disposed of, Bitcoin, Ethereum, the amount, so it's maybe 0.02 Bitcoin if you dispose of that much. The gross proceeds, which is the US dollar fair market value at the time of the disposal. So again, if I disposed of 0.02 Bitcoin in, let's say, December of 2025, and it was worth $10,000, whatever it is, that would be the gross proceeds amount. And then simply date acquired and cost basis. Now there is a catch there. This year, cost basis generally will not be reported to the IRS. So most of these forms will just report the fair market value of all your disposals, right? So let's say you had 100 disposals during the year. Essentially, those all get tallied up, and those are your total gross proceeds. So this is what is going to cause confusion, is because people and the IRS is going to receive these forms that just show, okay, you sold this much, but we don't know your gain or loss because we don't know how much it cost you to acquire that much. We don't know your cost basis. Thus, we don't know your gain or loss. And that's where, using crypto tax software, or if you're doing this manually, is important to track your cost basis. Any questions there?
No, not. But let me just do one thing. When David's talking about your cost basis and putting that in, because right now you're probably thinking to yourself, okay, I have Bitcoin. I sold Bitcoin in December, like David talked about, and I sold 0.02. What the heck was the price? Not for sure. And I don't know what it was on versus KuCoin versus Coinbase versus Kraken, whatever else. When you're here in CoinLedger, and again, this is a dummy account, when you click on import, you can import all these different things for all your different exchanges, and it pretty much has access to every single one that I have seen so far. Like, I even got my Voyager one from all those time ago, but that's just because it's stored in here as an Excel spreadsheet. Now that's another different question. We can answer that in a little bit, but when you want to just have like, what's the cost basis when I sold it at 1:38 a.m. on December 22nd, what was the cost basis at 0.02 Bitcoin? It'll just run that through and go, okay, that's it. And this is what you bought it for. This is what you sold it for. These are your gains and or losses.
Yeah, so if you click on Coinbase here, it has some data, it looks like, imported, and you can see what that looks like. So like, this is, you've connected it, we've synced all those transactions. And so now you just do that for all of your exchanges and wallets. And then, CoinLedger can see across your whole transaction history, and that's what allows it to track your cost basis. You obviously also could do this manually. It just becomes a very complex spreadsheet exercise to track, these transactions across 2, 3, 4, maybe dozens of wallets and exchanges.
Yeah, I'd like to live my life. I don't want to spend that behind a spreadsheet, so thank you, but that would be it. Hey, when we're going through all this, and we're linking our information to our specific exchanges, how about for safety? Because I know, like, in these days, for hacks and the different problems that are having online, how can we make sure this is actually safe? So like, if I just go to Coinbase and it's like, oh, okay, I'm going to wipe you out. How does that work?
Yeah, it's a great question. And so a bunch of things. Number one, CoinLedger will never ask you for any public keys. So that's, the information you need to be able to, transact and move money or steal someone's crypto. So what
Right.
CoinLedger does is we use an integration that's known as read-only access, and we don't control that. Actually, it's Coinbase who controls what level of access our application has with their data, essentially. And so when you click like connect your Coinbase account, it'll authenticate you into your Coinbase account, and Coinbase will say, hey, do you want to grant read access to CoinLedger, this application? And if you grant read access to us, all we can do is look at the transactions on Coinbase's databases, and then we can pull those into CoinLedger. But what we would have zero ability to do, even if we got hacked, let's say, the hacker would not be able to move your funds off of Coinbase or make trades on your behalf. All the attacker would be able to do is read your transaction history. And so that's like a massive security thing, obviously. So it's like, even in the worst case, CoinLedger gets hacked tomorrow, headlines in the news, the attacker wouldn't be able to steal your funds, move your stuff. And so all of our integrations work in that manner. It's read access. We can pull in the information, but we can't make transactions or move your crypto.
Yeah, that's okay. I mean, if they want to see my trades, go right ahead. It's pretty boring stuff. But also, if they get my email and password, that's okay, because the entire dark web has all of that anyhow. So
yeah, to be clear, we operate with the leading security protocol still. So we're not going to get hacked, but I'm just speaking in the worst case scenarios.
Gotcha. Okay, so that answers most of my questions. There's some questions already coming in, but let's keep going with those slides, and then we'll finish up and get to the Q&A, because I can see them coming in. Anyhow, what do we got here?
Yes. Okay. What does 1099 not report? We talked about what it does. What does it not? Okay. It's not going to report on your on-chain activity, right? Because the centralized entities are what are sending these out. So Coinbase doesn't know what you're doing on MetaMask and trading on, Uniswap or other DeFi protocols. It's not going to report your staking income or any form of earning tokens, because we're getting a little bit outside, but that's ordinary income. It's just reporting those disposals. It's not going to report transfers or activity from foreign exchanges, right? These are US exchanges that are filing this form. So that's what it's not going to report. Now, the big things for people watching, what's the number one mistake dealing with this form is overpaying on your taxes. Why? Because 1099 DA this year is only reporting gross proceeds, as we mentioned. So if you have $50,000 worth of sales, it's going to say, oh, $50,000 of proceeds, but you need to know your cost to actually calculate the taxable gain or loss. And so if you just take 1099 DA at face value, or you give it to your tax guy and they don't know what this thing is, they might just report that whole 50,000 as income, as capital gain. And then you're paying taxes on $50,000 worth of capital gain. Now, what if on the right side of this, what if your actual cost was $45,000? That means your only taxable gain is $5,000. That's actually what your taxable gain is. And so that's why it's just people are at risk of overpaying this year, because the 1099 DA is only reporting gross proceeds.
Gotcha. And well, it makes sense, because that's what we're talking about here. When we integrate with the different exchanges, it's going to tell them hey, this guy, David, paid $63,000 for Bitcoin. Today it's at 69,000. He sold it, so he just got a profit of roughly 6,000, not a cost basis of, or not a total gain of 69,000 or whatever else it is. So let's just, we'll make sure it's there. Okay, David, anything else on this one?
No.
On the slide.
Then the second biggest mistake is ignoring it entirely. A lot of people are don't head in the sand. This is not the way to go, because the IRS is receiving a copy of this form. So if you ignore it entirely and they see nothing reported on your personal tax return, that's going to trigger an automated kind of red flag to the IRS. And you'll likely receive a letter that says, hey, why didn't you report this income that we know should have appeared somewhere on your tax return? Got it.
Okay, so it makes sense. Before we go to the questions, anything else on the slides, or that's it?
We could hit on
yes,
a few more. These are just common questions we get that I thought would be helpful for people watching.
Yes.
But
these This scares me. Go ahead, Dave.
Yeah.
Sorry.
Will you be audited? Okay. So there's going to be small mismatches. This is just such complex data, and the IRS is not the most sophisticated party, and the exchange are still figuring this out. So the reality here, small mismatches are very rarely going to trigger an audit. Okay. As I mentioned here. Automated notices for like very small, my proceeds was reported as 50 cents higher here and 50 cents lower there. Very unlikely. Humans, if there is a flag, will review that, and it's just not likely to lead to an audit. What can is, again, if you just fully ignore it because the IRS is receiving this 1099-DA, and if you just have nothing reported on your personal tax return, that's what can trigger CP 2000s and maybe audits. But a lot of questions on like, okay, my 1099-DA is slightly different than my own records, by a couple bucks here, a couple bucks there. That's not going to be the thing that's triggering audits. Okay.
For our people who have ADHD, remember, it's going to be okay. If it's a couple of dollars off, they're not going to audit you. It's going to be fine. Just kind of push forward. Okay. Thank you, David. Because for me, I kind of look at that and go, everything has to be perfect, but it doesn't. Gotcha.
Exactly. So what's the game plan? What you should do is import your 1099-DA to CoinLedger, connect all of your accounts, then review all of those transactions because now you have your cost basis reported properly, and then download your tax forms. By the way, you can do this manually. I'm not saying you must use CoinLedger, but the platform is built to just make this simpler. And so that's kind of how you should tackle this, because you just need records to actually show your cost basis so that you don't wind up overpaying on your taxes.
Gotcha. Okay. Well said. We appreciate it. It looks pretty good. It makes a lot of sense though, because we have these new forms, it kind of gets confusing. You're like, what do I do with this? This is a little bit odd, but yeah, just do the software and kind of run things through. All right. So everybody, what we're going to do now that was a pretty comprehensive look at what is happening. Let's go over just some questions, and we'll get David out of here so he can go back to dealing with another mountain of questions from everybody else.
Yeah.
All right. So let's see. Plato's always got stuff to say, which is good. Remember to make sure you check with your country jurisdiction for tax specifics applicable to you. Definitely so. That's very, very smart.
Exactly. This stuff is only relevant to U.S. folks.
Right. For the 1099-DA. But of course, if you're looking for like, what's my cost basis and what potentially, could I be, on the hook for taxes? In different countries, there's different provisions, but the software itself is multi-nation. So you can definitely use that to help you figure out. And then also that portfolio tracker is 100% free. And I use it, all the time, just to make sure I'm actually up and up. All right. One more, well, bunch more. The 1099-DA doesn't know what you bought crypto for if you bought it on a different exchange. Well, this would be like if somebody uses Coinbase and I guess Binance. I don't know how the heck they would do that unless they did something illegal like a VPN, which we do not talk about here. But let's just say that did happen. This is only for U.S. citizens, I believe.
Yeah, he's hitting on a very common thing. A lot of investors do use multiple different exchanges. And so this is the exact cost basis tracking problem, because let's say I bought it on XYZ exchange, I sent it to Coinbase, and then I sold it on Coinbase. Coinbase doesn't know what my cost basis is. So that's why it's important for you, Mr. Taxpayer, to keep track of those records so that when you need to fill out Form 8949, I know we're throwing out a lot of form names, but that's just the form that actually reports your gain loss on your tax return. Then you can fill out, okay, my cost was this, my proceeds were that, thus my taxable gain is this. And so that's what, is kind of the process.
Yeah, makes sense. Just Mike asks, how do you report Coinbase Pro transactions?
Yeah, so the same way as other transactions. I know Coinbase integrated Coinbase Pro into kind of the same application. And so I believe all of your Coinbase Pro transactions should be available in your Coinbase account. We definitely have help documentation on exactly how to do this. I can't remember off the top of my head if there's any weird things, but those transactions should be in your Coinbase account.
Okay, got it. And then how about this one? So do we have to file a 1099-DA even though the exchanges are sending it to the government?
Yeah, that's a great question. I should have hit on this a little bit more. 1099 DA is not something you include with your tax return. It's just an informational form that you use to help fill out your tax return. So no, you do not need to send in a 1099 DA. It's just what you receive as kind of information from your exchange. And obviously the IRS also gets that same information. But you use 1099 DA or your tax person to fill out Form 8949, which is actually just your holistic gains and losses across all of your transactions. So let's say you receive a 1099 DA from Coinbase, a 1099 DA from Gemini, and a 1099 from Kraken. You would suck in all those 1099s to fill out one 8949 form. And that's what is included with your actual tax return.
Got it. How about this one? This is where you lose access. Doofus Monkey says, I lost access to my KuCoin account, so they won't let me set up an API to track trades I made a few years ago. How do they deal with that? Because I would think legally they have to give them some kind of documentation, correct?
Yeah, it's a tough problem. It's existed in the crypto space, since the dawn of time. But what we typically recommend is first, send the KuCoin, I know it's annoying, but a customer support request being like, hey, I need my transaction history for my taxes. Send it to me. And that often does work. It takes a little time, but they can send you typically like a CSV file of all your transaction history. If you still, they're ghosts and you can't do that for maybe like bankrupt exchanges, or the best thing we recommend is look at the amount you transferred into the exchange whenever you first started, and then the amount that you have transferred out, if any, and do a best faith attempt to kind of report the income that was generated from that. For those situations, it may be good to talk to a tax professional. I know it's annoying, but it's kind of like make a best faith effort. Hey, IRS, I really don't have access to any of this transaction history. Here was the inflow, here was the outflow. This is my income. Include a memo with your tax return. And that's typically what the approach people take is.
Gotcha. And then I remember, let me take a look here. If we're looking at like to import information, of course, you've got your exchanges here. You add an account down here. I think it's under manual where you would do like a CSV file.
Yeah, you can attach CSV imports into any exchange nowadays in CoinLedger. And that's actually what we'd recommend now. This is a little bit older process. So like if you have a CSV from, let's say, KuCoin, in this case, you'd still click on KuCoin, you'd click on import file, and you could drop in.
Okay.
CSV,
Gotcha.
so that it stays in the correct wallet.
So it'd be like Coinbase, import file up here, and then, okay, perfect. Yep. All righty, what else we got? Spores says, I got a message about 1099 DA, but I don't own any actual crypto anymore. I only got crypto from Voyager. That's quite a bit of time ago, and sold it immediately. Do they send you one if your account is zero? It sounds odd.
Well, it's not about if your account is at zero. It's about if you disposed of any crypto during the prior tax year. So let's say I disposed of $1,000 and now my account's at zero. I would still receive a 1099 DA from that exchange. So if you received one, assuming it's not an error from the exchange, you must have made at least one disposal transaction, whether you traded one crypto for another, whether you sent it somewhere else, and then you're receiving 1099 DA.
Got it. Okay. How about this one? What if I had transactions less than 1,000? Does it really matter? Or is it going to be all?
It does not matter. You will receive a 1099 DA for any transaction amount. So there's not a threshold, which is a little bit annoying, but that is the reality.
That is the reality. And this is something that me and you talked about before. This is from Mojo. It says, audit quota also is mostly filled in regular submissions, less so for those that file extensions. He states, remember that corrected 1099s may come in late. True. Better to file for an extension than having to do an amended return, not financial advice. This is, I don't know how true this is, but this was someone that was actually told to me by a relatively pretty good to do person. They said, look, if you file right now, like with the majority of people, there's a ton that puts in there, and you could be put in that pile, or you can file for an extension. Then as they get to it, they kind of lose steam and you don't have as many audits. Now, I can't corroborate this. Maybe there's something that ChatGPT could do, but that was just a little tidbit of information. I don't know if you've heard anything like that, Dave, or that's just
I have not heard anything like that. It is true that, 1099s might get sent out later than they're supposed to, given that the exchanges are trying to figure out how to do this properly as well. And so he is right that corrected 1099s may come late. That is actually true, and thus maybe it can be better to file an extension. There's no penalty for extending your tax return, so it can be good, but I haven't heard that leads to like less audits.
Yeah, probably not. I mean, we still go for extensions every year ourselves, but that's us. How about this one? What do you do if you just don't have the data? I think Davey talked about this. Like, you try to get as close as possible that you can. The IRS knows nothing's perfect. Even the IRS is trying to catch up. But there's one here. Why am I getting a cost basis on stable coins? Is that just because Coinbase is required by law to do this, regardless of how much?
Yeah. So the first question, actually, CoinLedger can actually probably get most of your data. So there's a difference between your exchange is bankrupt, I haven't been keeping track. CoinLedger can reach back in time and get all your data. You just add your public address and we'll go to the blockchain and pull in all of your transaction history, rebuild all your transactions, connect your exchanges. So like, it's very likely we can go grab your data very simply. Now, why am I getting cost based on stable coins? So this may change in the future, but technically stable coins are still treated the same way as Bitcoin is. And so yes, your cost basis on your stable coins will likely match 1-to-1, but not maybe necessarily perfectly. And why? It's because like, think of like USDT, which at one point was worth $1, but at one point it was not worth $1. And so you'd still like, okay, I bought 100 USDC and then I traded it for Ethereum. It may be the case where when you traded it, it was worth 101 USDC just due to where you're trading it, what's the liquidity profile on the trade. So like the exchanges do have to report stablecoins the same way as Bitcoin. At times they might not be absolutely perfect because there's still a mechanism that's balancing it, $1 equaling $1.
Yeah, it's not easy. That's why I'm glad you guys do it, because I don't want to go through all this stuff. Okay, let's see. And David, we're coming up on that 30-minute mark. Let's see if we got anybody. Can you file an extension if I owe you money?
Yeah, you would just need to make sure to pay an estimate of your taxes. This is what you do when you file your tax return. So let's say that you are not planning to get a tax refund, but you actually owe the IRS money. Like that's kind of my circumstance. I know I owe them money. And so I would need to cut them a check before April 15th. And then once September 15th, the extension deadline, or excuse me, October 15th comes around, then I've like got my full tax return. I know exactly how much I owe. If I overpaid, they will send me a refund. And if I underpaid, I will technically owe that money plus a slight penalty. So extending your taxes does not mean you don't have to pay your taxes. It just means you're extending filing your full tax return. So for folks who the IRS owes them money, it's common for people with W-2 jobs, right? Then you're kind of fine. But if you're going to owe the IRS money, you do need to write an estimate and, cut them a check before April 15th.
Yeah. If I owe the IRS, they're like, hey, penalty. But if they owe me something, like, you know what, take your time. No big deal.
Exactly. It makes sense, right? They're like, we can hold on to your money for you.
No problem. And then lastly, just to make sure we're on the same page, and David, we'll have you back on again. And if you want to bring anybody else, with you, any CPA that you guys got working for, it'd be great. But just to reiterate some things, Spiraling says, now I'm completely confused. I don't want this to happen to anybody. So we fill out a 1099 DA, but we are not sending it in with our other tax forms.
Dang, I'm not doing a good job. I apologize, Spiraling 69. No, you are not filling out a 1099 DA. You just receive that form, right? It'll get emailed to you. It'll show up in the mail. And it's just information, right? It's like, hey, Spiraling 69, you sold this much Bitcoin, you sold this much Ethereum on this date, yada, yada. Then you take that information to fill out Form 8949. We have blog posts on all of that. We'll drop it in the description. And then that's the form that you're including with your tax return. So to be clear, you don't fill out 1099-DA. You just get a copy of it from your exchange. You take that to fill out Form 8949. Well
said. All right, buddy. So I know there's probably some more questions in there, but David's time is limited. So what we'll do is we'll bring you back on. I mean, look, we've got until, well, we should do this relatively soon because we got till April 15th, and that's rapidly approaching. So everybody, everything we talked about, links in the show notes and description. David, thanks for coming on. We appreciate it. And that's it for today. So everybody, like today's video, a thumbs up, subscribe, all that great stuff, and we'll see you guys on the next one. Thank you, David.
See ya.